The insurance industry has undergone a lot of changes in the past 1 year. Meanwhile, the general insurance industry has grown by 16% in FY23. To talk more about the industry and the company in general, we have with us Mr. Rakesh Jain, Chief Executive Officer of Reliance General Insurance. Welcome to the Business Channel Banking Show, sir.
Thank you. Thank you for calling me today.
I would like to start off with a question that in FY23, we saw that the premiums of general insurance industry went up by 16%, but Reliance General saw an increase of just 9%. So how would you care to explain what happened there?
So I think if you really see the general insurance industry in the last 3 years, of course, the COVID years, had actually gone through a big, I would say, pain. And the industry almost dipped to a zero growth, in the years 21 and 22 was a modest turnaround. Having said that, I would say that Reliance General Insurance, we have always believed in consistent growth. And if you really see even the earlier last 3 years, when the industry was as good as very marginal growth rate, we had grown 15%. This year, when we entered into, there were two things which were actually in front of us. The first thing, we obviously wanted to correct a bit of a balance in our crop insurance portfolio, which is a good part of our portfolio. And we had taken a calibrated view to undergrow the crop insurance. Of course, we have grown crop insurance. If you really see for GI players, crop insurance has grown 12%. For us, it has grown 5%. So and it's a big portfolio. It's almost 30% of our portfolio. So we had taken a view to balance the portfolio well. And I think that is one big reason. The second reason is also in motor insurance. We saw that there was a significant steepening of claims coming in, especially in the own damage side of motor insurance. And the third-party rates which got increased were also quite nominal, for us to give that any comfort in the overall portfolio. So looking at all that, we thought that this was a year of consolidation. We have grown 10% this year, from about 9,500 crores. We have closed the year at 10,500 crores. So we have grown 10%. We are in no tearing hurry to really grow this business to an extent where we don't understand the risk. For us, a growth means it should be consistent, it should be quality, and it should be sustainable. We don't want to grow and then correct and then grow and recorrect. This is, to my mind, does a lot of challenges, not just at the company level, but also with our distribution, our partners, and I think overall consistency helps a company to stay on that path. So my feel is that we are entering into a new year with a lot of learnings and good understanding. We are also hoping that the TP rates gets corrected now, because this has been a long time that we have had a good correction.
Generally, what we have seen is growth in the general insurance industry has been driven by health segment. Now, but motor, especially in FY23, it has come back. The growth has come back. So would you say that the motor segment has got its mojo back, or it's still early days to say that?
See, I would say that the motor industry has come back because of the base effect. It's not that the industry has dramatically improved. I think the two-wheeler industry continues to struggle on, still performance. Commercial vehicles has been in between. It has bounced back in certain segments. Certain segments are coming in. Private car luxury segment has done well, which obviously is a very small component of overall, car sales. And the rest of the segment has done a modest thing. So if you really see the mojo has been when new models have come in, and perhaps the SUV category between the 10 to 20 lakh bracket, that has seen a lot of, I would say, interest. And the luxury segments. Frankly, the volume growths have been quite modest. So most of the people are saying that we are back to pre-COVID times. So in some ways, the last 2-3 years, mojo is like going back to where we were. So in my view, that the industry has come back to pre-COVID reflects that all the challenges are over. Now the question is, how do we build on this? So I would say that we have also felt that thankfully that we have come back to our old this thing. We have grown our motor insurance portfolio about 5% this year. The industry has grown about 10%. But long and short, as I said, if it is not economical, if third party is increasing, because the courts are now once again started to deliver awards, they obviously factor in judicial inflation in their awards. And even for the period, where the courts were closed, we are still paying interest for delayed settlements. So there is no way the industry can afford, to really handle motor insurance unless some of these things gets corrected. So we just hope that, there some of these things falls in place. And the insurance mojo built on a lot of uninsured vehicles, which can really bring in a lot of good revenues. Now with the, the link with, the government databases, the link with IIB, and even, with, travel bureaus and all, I think this will be very helpful for us to really, reach out to the uninsured segments and give a good product and grow this segment well. So I think it's a mixed bag, but it's good to be back to where we were before the COVID times.
As you said, there is intense competition also in the motor segment. So going forward, will health be the only driver of general insurance growth? And because what we have seen is that it has stagnated a bit since pandemic. So is it sustainable just going on health?
See, I think, when we look at health, the pandemic has to be seen in two ways. The first thing is definitely pandemic times were very distressing times. So a lot of people who were not covered, were scrambling for coverages. So I would take that as a crisis situation and a crisis response in buying, if you ask me. Post the pandemic, the second thing which has evolved is the awareness for having a good health insurance. And I think that is a structural shift, in the minds of every consumer and even in the minds of various other stakeholders, including, the regulators, the government, and, I think even a lot of distribution partners also, who were not maybe keen in distributing health in the past. So I think the structural shift which has taken place will bring in long-term dividends. And why these dividends will accrue is because the need for health, is tremendous. India is the most populous country in the world. And, half the country is uncovered. And even, let's say 40-45% of the people who are covered are actually covered in government schemes.
Yes.
And not on specific schemes offered to an individual customer, a customized cover, or, something which meets specific needs of an individual. So if you really see retail health, what we say, which meets individual needs, it's just about 4-5% of the total coverages. So it has tremendous scope in terms of, growth and opportunity. So health will continue to be a big driver in times to come. Of course, as I said, if retail health has to grow big time, it needs to customize its offering to the end consumer. It cannot be a generic thing. Hence, how new products comes in, how coverages come in, how service levels are created, how claims are settled, what experience you deliver. All these things will make a big difference. And this is where companies have to work hard to earn a good customer and sustain him for the rest of the life.
With the composite license thing coming in, there have been a lot of discussions, and even in the past, life insurance companies have been wanting to get into the health segment. With this composite thing coming in, do you fear that the exclusiveness of health insurance, which was limited to general insurance companies, would be taken away, and this could prove to be a problem for the general insurance sector?
See, it is very difficult to say because health is, of course, a universal subject and something which, everybody wants to do something. But one thing we must understand, the health which we are doing today, is predominantly like the way life companies are doing term life, because we sell indemnity products and it is hugely service oriented, claims oriented, and there is tremendous amount of customer handling and involvement. It is not like a long-term product, which is sold and you manage, many of the risks over a very long period of time. So I think there is a big difference in the way the construct of the, two health proposition is. Now, it is always easy to say that we can always do what the other guy does, but that is where time will have to prove. Like, in our case, we are handling, we are still a, a company which is coming up and into the top rung 3. But last year we settled over 23 lakh claims. Almost 60-70% of those claims were health claims. That is huge by any comparison with, other insurance industry, life insurance. And every claim, is a moment of crisis, customer response, even customer grievances, customer perceptions. These all have to be taken into account. You just do not drive a business in isolation. There is a way in which we also, want to handle our brand and our, the environment in that way. So I think this is a huge shift. It's not just like an opening of a sector. One thing for sure, even general insurance have also got a lot of, I would say, strengths. Like if we have sold indemnity products, we can obviously sell indemnity products across life also. That is a proven thing. Term life has been in some ways also looking for a leg up on the life insurance side. If those things come, we have to see and evaluate. As of now, it is too early for me to comment. Because health is a need for everybody. There will be enough for everybody. Because, if out of 1.3 billion people, if only 5% people are buying retail health, there is tremendous scope. And India is economically improving. See, what we have to also see that post large schemes of government and all, when people really move towards affluence, they want customized cover. They want customized offerings. They want certain facilities in hospitals. So they also seek treatments overseas. All this will happen to India over next 10 years, 20 years, 30 years, as our per capita shifts from $2,500 to $5,000 and then $10,000. $5,000, $10,000 do not just look at having a protection. They are also looking at experience of protection. Like ordinarily I have seen now, people are seeking to, insurance policies where they want to stay in a single room. Earlier, in the early days, I remember, people used to stay in double rooms or people used to take wards. Now people also seek suites. People also want to know if I'm going overseas, can I get treated for planned treatments? And why will this not happen? This is happening for other rich countries, developed countries. It should happen for India also. So people should make those choices. So I think a lot of these things will frankly drive your health strategy in a very large ecosystem. There is enough for everybody to really adapt and not feel threatened.
Now, if I can talk about reinsurance, I mean, April 1 is supposedly when the renewals happen. So have you seen hardening of rates? Because globally, rates went up by, say, 80 to 100% because of the various factors. So how has been your experience in the Indian market with Indian reinsurers?
So I think, yes, reinsurance renewal this year has been one of the toughest. And I would say that it has happened for reasons which are, significantly, I would say, different from what we have seen in India. So in some ways, the rates have moved up between 30, 40, 50%. And I'm told for some companies even more. So, the only challenge is, of course, we can all understand that reinsurance derives a lot of, capacities globally. The global people were hit. But this kind of an increase has been, in my 21 years, 22 years, I have not seen that. Even when India had a bad experience, I had not seen that. So, I don't know means how this goes and impacts, but for sure, a lot of the products, which are built on protection, will have to undergo a change, either in terms of coverages or in terms of pricing. And if this trend continues in future, this has also implication on the way you accumulate or write risk. Because it is not possible to pass on 30, 40, 50% increase to various people, more so when things are emerging. People don't buy enough, retail fire products or protection covers. So it is a very significant adjustment in my view, which will happen over the next, 1 year or so. And we need to really understand, we need to build capacities which are, more India-centric, more deep-rooted in this country. Because, if we only get, if the increase is 10, 15%, it is okay. For example, I remember when Thai floods happened, floods in Thailand happened, Indian reinsurance rates hardened. But even WTC happened in 2002. There were a lot of changes which came. But most of those things, if you ask me, were very, moderate. And the industry took that in the stride. What has happened this year has been a bit of a knee-jerk, and a big knee-jerk. And, across the board, and Indian, if you really see last 2-3 years, we have not had any cat event. So the reinsurers had built a significant surplus, from the Indian treaties to the best of my belief. At least my treaty, I can certainly say that. But still we were exposed to, a higher rate and across the board by most of the, reinsurers or even, foreign branches and everybody. So I think it's a point of debate. At this stage, it is difficult for me to say about what the industry thinks. But it says something, if we have to build a good property portfolio and all, we need to have some India-based, ratings or learnings coming in. And that helps us also to price those products for our customers in that way.
Coming to exchange of management regulations and commission regulations that the regulator has brought in, analysts have reckoned that perhaps general insurance companies and health insurance companies have to reduce their payouts, which in the past perhaps were more than what was prescribed by the regulator. So what is your take on that?
See, I think the expenses of management regulations has been a very necessary overhaul of the, the multiple regulations or limits, sublimits which existed for decades. And, the business format, the way of doing business, has tremendously changed in the last, 1 decade or so. So I think the industry has been seeking IRDA to merge, some of the limits for commission into the overall expense limits and all. So I think what IRDA has done is they have simplified for the insurance companies, by doing away with some intermediate regulations on commission ceilings and all. And they have put an overall cap on the expense. And the overall cap is based on what they have seen as being the industry trend. So it is not that the overall cap is in isolation. So the 30% cap which has been put for general insurance company has been broadly in accordance with what the insurance companies have been spending overall. So nobody is disadvantaged on an average basis at least. So in my view, that, the EOM guidelines now put a ceiling. Insurance companies obviously would like to cater to customers, retain customers, give efficient products. It's an extremely competitive industry. So you really cannot overcharge the customer and move away. What EOM guidelines have gone ahead to say that if you are bringing efficiency, if you are able to moderate any cost, please pass on those benefits to the customers. So in my view, the expense limit, either the expense goes down or alternatively, you may realize the price may go down. If price goes down 5%, your ratio need not change too much. The real trick is to see that the price for the customer is reduced if your expenses are optimized. And that is what I feel will also help in improving the penetration of insurance.
Thank you very much for taking our question. Thank you very much for your time.
Thank you so much, Shubhrato. It's a pleasure speaking to you.
Thank you.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.